Hey guys, welcome back to episode 4, week 4 of this weekly update to my portfolio and my journey to retiring by 40. So before we get to that, I have a quick update on these videos. So I have noticed that the last two videos that I've done are pretty long, and I don't know if everyone's watching them entirely or they're just kind of just tuning in for one half and then kind of tuning out with the other half. The way I was structuring them before was that I would talk about heavily about or try to break down investing lingo and kind of go into it a little bit further. Like last week, it was about investing, but I don't think it does a good service to either my weekly updates or the actual topic. Like for example, last week with the dividend video, I don't think I gave enough information about dividend investing, and I don't think I gave enough evidence to how powerful it is, because you can snowball into a great potential financially independent situation with just dividends. Dividends are very powerful, but I don't think I gave them enough spotlight. So I think going forward, if it's a big topic, I will make a dedicated video just for that topic so we can delve in a little bit deeper and actually do it justice. That's enough of the updates. Let's get back into this week's show. So, we're going to go over two quick topics. So, the topics are not going to change in the beginning of the video. I think they kind of make it more interesting when we get to the actual weekly update. So, the first thing is you might notice that on Robinhood, I have, for the day view, I lost 700, about 800, and then I gained back about 800. I do notice these little weird glitches all the time. Now, these little glitches are okay, right? But I'm sure if you guys have been investing long enough, you guys have ran into problems where Robinhood just doesn't work, meaning you can't sell stuff that is tanking. So you have to go down with the ship. And I don't know about you, but I'm not an honorable captain. I want to get out as fast as possible when the ship is sinking. So I guess my question is, what stock apps do you guys use? Because I actually use quite a bit. I use Robinhood, I use Vanguard, and I started using Webull about 4 months ago. I don't really use it that much. Actually, so out of the three, I like Robinhood the best with all its problems. I did try Webull, but I feel like Webull also has its problems. For example, randomly it just doesn't load data, and that happens quite a bit. Like you can go to a stock, any stock, and it just doesn't display any data, and you can force close out of the application, come back to the exact same spot you ran, it still doesn't show data. I don't like that, personally. I know people give Robinhood a lot of flack, but I've had problems with Webull too, and the problems I have with Webull are pretty. I can't tolerate it because obviously, if you're gonna be investing, you need the information about the company, and you need the option to invest. So you're kind of in the same boat with Robinhood, where you can't do anything for a particular stock ticker, except I can't even get any information for the company, and it bothers me. I don't know. So out of the two, they both have problems, but I prefer Robinhood. Um, yeah. So let me know down below what platform do you use, because I might switch from Robinhood, if tempted. Right. So this week I got quite a big jump in my total. Ignore this one. This is for next week. I'm just kind of preemptively prepping it since I contributed, but it hasn't reflected yet on my account. It'll reflect on Monday. Um, yeah, pretty big jump, and you might notice a sizable chunk of it is from my 401k. So before we get to the breakdown, the reason why is with 401ks, your employer, if you have a decent employer, they will match a percentage of whatever you put into your 401k. So I'm going to use my company as an example, right? I put in money into my 401k, and then my company matches up to 5% of my paycheck. So let's say I put in 3% of my paycheck, they will match exactly 3% of my paycheck and put in the same amount into my 401k. If I contribute 10% into my 401k, they will only give enough money to match 5% of the paycheck and put it into my 401k. But the thing is, though, they don't give it to you right away. Um, they let's say they do put into an account and let it sit there, but you don't earn money, or at least in my case, it's not invested, so it doesn't earn money. It's not it's just sitting there. It's like a savings account, but it doesn't even get interest, right? Um, but recently, I would say somewhere in the middle of this week, I actually got vested. So my 401k got vested, meaning all the money that was sitting there that was given to me by the company, the match, is now my money. So the big jump is here is not that I got $1,000 from my company in the duration that I was not vested, but now the all the money that you see here is being allocated into ETFs, however this particular 401k allocates my money, and I made a lot of money that way because now I have, instead of having like half of that, maybe I now have the full amount, and that's being invested. So we'll see if going forward we'll get these big jumps in gains, and hopefully not those big jumps in losses, because now since everything's getting invested, I can gain a lot of money, but I can also lose a lot of money. I'll be watching that. Okay, so what did this week bring for me? So I'm very happy actually. I beat my previous high by quite a bit, and I got so happy. But now it's psychological right now. Now I'm trying to beat this one, as my weekly gain goal now has to be greater than this, and we'll see if it's achievable. I'm not too sure. So besides my 401k, I did all my accounts went up. My second biggest gain would probably be it would be like a tie between Robinhood and my ESPP account, probably. Now, if you watched my last video, I mentioned that this account it'll fluctuate tremendously between 2 points, and I think I said 1,500 and like 1,800. So I don't expect these gains to be. I expect this to be lower next week, just because all my shares are from one company, and that's if the company goes up, it goes up, right? If the company goes down, it goes down. That's essentially it. Now, my investing style this week was very, very cautious. So, for the most part, I bought just a whole bunch of technology stock, like usual, but I don't know. I just don't see. It's been getting a little bit weird, where prices are getting a little too high, and it's been consistently going up. So I mean, obviously, you cannot go up forever, right? There has to be either a point where oh, okay. So I thought the split was going to be on the 31st, on Monday, but I guess it happened over the weekend. I believe that's why this is weird then. Okay, so Apple split, If you guys have been following Apple, they did a 4-to-1 split. So now it is uh, the share price is the previous share price divided by 4. So it's very cheap now. It's a really good low barrier to entry. However, if you're doing what I do is fractional shares, it doesn't really matter. However, people that don't have that in their brokerage account, they see the lower price and might be tempted to buy it. So we'll see. Anyway, so yeah, I'm primarily investing in tech stocks: Apple, Amazon, TSM, Microsoft, and Red Violet. Um, I'll talk a little bit about each. So, like I said, all these companies have been going up a lot every week for the past couple months, and that is not sustainable, right? So you can see here in the 3 month chart for Amazon, this growth is amazing. Like it's abnormally amazing, especially during a pandemic. Now you might argue tech stocks should be doing good because people are at home using technology, which I agree with, but you cannot have that momentum forever, right? You need either a place where you there's correction like this was a small correction right here, or just points where there's just not that much uh, consistent gain. So I'm a bit scared personally that so a lot of people throw around the word bubble. Basically means that a particular asset or a group of assets are getting pumped up to or inflated to an insane amount of value, and then when people at the top or people that have influence over the market don't want to or want to they don't see potential in that company, or they had enough gains from the bubble, so they start pulling out. So then the smaller people start pulling out, and then everyone starts pulling out, and it just starts trickling down, right? I don't think we're in a bubble, but I also don't think this is sustainable, and I don't know what the ramifications will be. Like, will it, for Amazon, for example, will it go down 400 points with a correction? Will a correction only be like 50 points? Like, what is the correction? And I just don't know. So I've been doing fractional share investing and putting small amount of dollar values into each company each day, especially if it goes down. If I see it go down, if it's like at a 1 to 5% on the daily down, I invest a little bit more and try to cost average down. But I'm a little bit scared because I don't know what the future will kind of bring for all these companies, and yeah, I think it's good to be cautious a little bit now, since it's a weird time where tech stocks especially they just keep going up and they haven't really corrected in a while. So besides me being scared about that, the reason I'm investing in most of these companies is because I believe in them though. So even if there is a correction for tech companies, I do believe that these companies will not be overcorrected. In other words, they won't go down as much. They're relatively safe. I mean, Apple just hit $2 trillion market cap, and they in the fall they're releasing new iPhones, new iPads, new Apple Watches, new Macs with Apple Silicon. Apple will be good in the upcoming year. Amazon, I mean, obviously, it's a tech giant. They are everywhere. If you're a developer, you probably know about AWS, which is a suite of online basically tools developers can use. They don't have to invest in their own infrastructure. They can just plug and play with AWS services, and they can make a ton of money there in the corporate sphere. So they're definitely good. And Microsoft, same thing as Apple. They're an established company, They're relatively safe, and I'm trying. I got in late. Microsoft actually went up quite a bit this week, and the reason is because they are potentially going to buy TikTok. And funnily enough, they're teaming up, unless this was only a rumor, they're teaming up with, what's the company? Walmart. Microsoft and Walmart are going to, they're going to buy TikTok. That is the weirdest combination to buy a company from China that makes video. It's like a video, not streaming, but like a video sharing network. Microsoft, I understand they're a tech company, but Walmart is a little weird. But I mean, hey, if it helps both Microsoft and Walmart buy it and make more money, I understand it. Just a little bit weird. Um, so besides that, since I am a little bit scared of investing in companies individually, I started looking into some ETFs that kind of piggyback off the market, like the S&P 500 and all that stuff. And that's what QQ, I believe, is. I think it's the S&P 500. Oh no, so this one's at NASDAQ, which I believe is Apple and Amazon. It's like the top 100 companies, which usually just includes it includes a shitload of tech companies. Like that's basically it, I believe. Um, yeah. So in conclusion, with my spiel here, I'm quite a bit scared of the uncertainty of the market, and yeah, I'm kind of playing it cautious, and that's probably why you don't see huge gains week over week, but you also don't see big losses. So I'm trying to minimize my losses, because in the end, gains are good, but losses are bad for me personally. I don't want to lose anything. I'll leave it at that. Let me know below what you think of the current situation in the market. Bye.